Hey, it's Sasha Evdokov, and today I want to do a little discussion and share with you the difference between real estate investing versus investing in the stock market. Now, I find that a lot of people who are ingrained in their own investment vehicle, such as real estate or the stock market, really try and push that onto people, but that's not what I want to do. Me personally, as a disclaimer, I prefer business investing or the stock market, which is technically investing in businesses. Now, for you, you can choose to invest in real estate, which is what a lot of real estate people will push you to do, or you can choose a different investment vehicle. So that's what I want to recommend to you, is that you need to choose a vehicle that works for you. And how do you choose it? Well, it's based on which one can you stick with for the long haul, for the rest of your life. So choose one that you enjoy, that you can stick with for the rest of your life. And that can be either things like gold or rare and precious metals. It can be diamonds and so forth. It can be antique dolls. It can be antique cars. You can invest in stamps, commodities, all kinds of different things. But choose one that works for you, that you can stick with for the long haul. Doesn't matter which one, but learn it inside and out. Now, a lot of people that I've talked to that, said they had conversations with real estate investment gurus, they always say, hey, real estate is better. And then you talk to some stock traders and they say, hey, stock market is better. But they do have their advantages and disadvantages. And of course, the stock market hasn't been around as long as real estate or property investing. If you think of property investing, back when we had kings and queens, your wealth was kind of determined by the amount of land that you had, and hence why we had a lot of battles between countries and a lot of wars that broke out was due to the land, who owns the land and who owns the property, and this kind of showed a lot of the wealth. Now, if you invest in real estate nowadays, now you have renters and tenants, and you have these landlords, so things have become more complicated, but it's all based on property. So now in the modern world, you can still grow your investing from taking something from a lower asset value, holding it for a certain period of time, and taking more money out. That's what I think of investing, is putting money into something and then taking more money out after a certain period of time. Now, you can do that with real estate, you can do that with the stock market, you can do that by investing in gold, coins, or even stamps. But there are advantages and disadvantages to both. So if we talk about real estate and we talk about the stock market, one thing that I personally enjoy about the stock market is that you don't have to buy a full house. You can buy a part of a house. So for example, you can buy 100 shares or 10 shares of a company. Whereas when it comes to investing in a house, yes, you can buy a smaller house, but you can't get 2 rooms of a really nice house in a property or area that's booming. You would have to buy a $2 million home maybe in that area. So instead, in terms of the stock market, you can just buy 5 or 10 shares. You can buy 50 shares, 100 shares, 1,000 shares. It's really up to you. Obviously, you won't buy the full company, like you can't buy Google all the shares. It's just too costly for any one person to maintain. But with a house, you can get the full house if you want, but it's not as costly if you want to invest in the stock market. Whereas if you want to invest in a house, it's much more expensive. Now, the flexibility that also goes along with the stock market is quite great. For example, you don't have to be anywhere near the stock market. You can be somewhere in Alaska, you can be somewhere in Thailand and still trade and invest in the stock market. When it comes to investing in your real estate, you may need to then have a person that you know or a property manager watch over your investments, and this can take a toll on your profit. Otherwise, you'll have to be there personally and have a fixed location, and it's very tough to get rid of it. So if you want to sell and liquidate a house, it may take 3, 6, 8 months to get rid of a home, whereas with a stock, it'll just take you a day or two, or if it's the weekend, maybe a couple days, and you're out of your full position. So that's kind of some of the things that you need to think about when it comes to investing is what are the advantages and disadvantages between these types of vehicles. Now, I'm not pressing one or the other because, for example, real estate on its own has some great advantages. You can continuously build equity if you have people that rent the home, and then you're building equity and eventually you can sell the asset. So it's kind of like building free equity. But of course, you need a little more startup capital. Well, in order to put your down payment, you may need to be there in location. So there are always advantages and disadvantages. But look at the different investment vehicles and see which one is right for you, because all of them have their advantages and disadvantages, and then make a choice accordingly. After you do that, stick with that investment vehicle, learn it inside and out, so that way you know what you can do, what you can't do, what are the prices, how do the prices move, how do the prices shift, how quickly is it to sell. And it comes down to really your lifestyle choices. I find that a lot of new investors, meaning new 35 and under, prefer to actually invest in things like the market or things that they can get in and out of quickly. More so because they don't want to be confined to a location if they get a different job or if they want to do or create a new business. Things have become more of a global economy. So I find that real estate confines the younger generation much more so. Whereas a lot of other people still like real estate investing. And real estate investing has become a huge investment strategy for a lot of billionaires in this world because it really comes down to property rights and you're owning something tangible. But I find that some of the newer investors prefer maybe the stock market just because for the flexibility behind it. Now, I always recommend having something physical. So even if you're trading or investing in the market, always transform it into some physical, tangible asset eventually, whether that's gold, whether that's commodities of some sort, diamonds, precious metals, whatever it is, or even real estate. Of course, unfortunately, then it's a lot tougher to sell it because it's less liquid, less easy to get in and out of. But think of these concepts. Don't be pressed by any one person which investment strategy is right for you. Make a choice, whether it's stamps, whether it's gold, whether it's commodities, diamonds, whatever investment strategy you want to go with that one. And do your research, do your due diligence, and then stick with it. Don't give up on it. Stick with it for many, many years. Because one of the worst things you can do is, get into investing into the stock market and then quit 2 years later, then get into real estate, quit 2 years later, get into antique cars and quit that as well. You'll just be bouncing in and out of all over the place, not really having a clear direction or a real focus into what you want to do. I'm Sasha Evdokov. Thanks for watching this video. I hope you enjoyed it and I hope it made you think a little bit about your investment process and where you want to go with your investments for your future. If you want to check out some of my courses regarding the stock market, then go ahead and check them out at tradersfly.com. Thanks again, and I look forward to seeing you next time. And don't forget to do what you love, contribute to others, and most importantly, live life abundantly. See you next time.